Hey traders, happy Mother's Day to you. Just gonna do a quick video on Bitcoin, just because, like, I don't know, I'm going to my family's house and just to hang out with them and all that. So I don't know when I'll be streaming, but either way, man. All right, so first thing I want to talk about, I'm looking at Bitfinex, Bitcoin, US dollar, Bitfinex, and anchor point 1 and 2 are the same on my channel. But something I did was just thinking outside the box here, and that's what you have to do. Is I changed my top anchor point, all right, and I changed it to be that first impulse up we got, right, the 38% retrace. Remember our bullish Gartley? That was it, man. That was the beginning. This bullish engulfing candle set the tone for the entire run. Okay, this was February 8th, if you don't remember. And when I did that, you can clearly see how we've somehow maintained within the parameters of the channel using that first impulse. Okay, so the catalyst candle, I guess, whatever. So Golden Cross happened on the 25th of April. It's been smooth sailing since then, right? The whole, everyone talking about, oh, it's a fake out cross. Well, we've kept going up for now, but, at this time, we finally hit that nice real, yesterday we broke some overhead resistance at 6,800. And as soon as we broke it, man, we knew where we were going. Immediately, 7,400. We ran up, we finally touched it, and back tested it. Again, daily time scale here. So we're just creating an indecision candle after a nice green candle. A decent amount of volume, so people taking profit. It's clearly a sell wall, right? Why would there not be at overhead resistance levels? Because if you broke that, pretty good likelihood you'd be running up really quick to 8,300 to 8,500, the next overhead resistance. And then the one after that is like 98.66 to 10,000. Then after that, well, I don't have it plotted, but I guess now I do. The next one after that's like 11,500. So you get it, man. It's like each overhead resistance will act as a critical area that we must break and hold above, just like we have broken, remember, this overhead resistance. You can see these lines. And we're holding it as support for now. As you can see, we bounced off of it, which is good. You have to do that. So you do that for long enough. You stay above those areas, and then you reset your oscillators. You get out of overbought territory, only to become overbought again when you eventually break to the upside, break over resistance, and run to the next area. Okay, we knew this area was extremely important for a multitude of different fib anchor points. All right, so what I'm talking about is, all right, so from that swing high, right, from July of 2018, high to low. That's a 78.6% retrace. All right, from anchor point, anchoring from the previous swing high from May 5th, high to low. What was that? That's a 62% retrace, 61.8% retrace. If you fib from, it's going to get too busy. If you fib from your high point here, your previous high point to your low point, the way we were doing it with that potential crab pattern that we went way higher than, we're actually hitting a 361.8% retrace at the exact same area. Okay, so much confluence, but you get that, right? You see, like, that's how you find out, like, really where strong resistance or support would be, by getting confluence. All right, and that's just taking two different anchor points, two different swing highs, and making, anchoring at the same swing low. Okay, but there's even more confluence. Yes, wait, there's more. This is the important one. All right, I think you'll all think it's pretty cool. So from your all-time high, and we did this yesterday, and that's why I'm bringing it up now, from your all-time high to that low we hit, you've hit a 23% retrace, and that is a very good thing, okay? The fact that you've hit a 23% retrace lets us know this is most likely a valid swing low, because you can't even really use Fibonacci until you you have a valid swing low or swing high. And the only way to really know that is when you make a 23% retrace, and that's what we've done. And so not to like be, moon boyish or price predictions, man, none of that stuff, but just in regards of how technical analysis works on any traditional market, using Fibonacci, doing the exact same thing, treating Bitcoin like it's any other thing that exists out there that is a chart. A common retrace from your swing high to swing low would be between 9,500 and 13,511. Okay, so I'm not saying it is a certainty we are going there. We might get there in time, but that is it, man. You've made your most shallow retrace, so we know the swing low is pretty much valid to, from going from your all-time highs to your low. So this is big news, man. So selling off here, nothing wrong with it. I don't think you want to really be going below 6,800 because there's like all this support here now that was once resistance. You want to hold that. I don't want to see us go below that because, dude, when you break over resistance, you stay above it like you're doing right now. You do not want to go back below it. Okay, but if you did, worst case scenario, if you did and you sell off, you don't want to be going anywhere below 63, 67 because as you can see, we have a beautiful, beautiful upsloping channel that we're making sense of. The bottom, no problem. The top, hey, making the adjustment makes a lot of sense, right? But again, selling off here, not falling below 63 to 6,500, depending on when we get there, moving targets. Think you're safe until then, okay? So you were pretty high. Look how far away you are from your 20-day moving average. I mean, in time, you're going to be pulling back to touch that, test that, maybe even the 50 at some point, right? But maybe not yet, but we know very overbought on daily time scale, 4-hour time scale, probably not the 60-minute anymore after all this price action, but either way, man, look, you've heard it here first, or maybe not first, but you heard it here from me first, or second, because I said in the live stream yesterday, just fibbing for our golden zone. It's the same freaking way we did it when we came to our conclusion about Bitcoin from the November 7th high to the low of December 15th. How we got our golden zone where we expected a retrace in some time, and we got it, but exceeded it. So just doing the same thing on a grander scale for Bitcoin. All right, 9,500 to 13,511 if we're lucky, and we can, if demand keeps staying around and people keep buying, if the market cap keeps building. What are we at today? Hold on a sec, y'all. Give me a sec. Market cap right now, 211 billion, so it's slowly increasing, and we know Bitcoin dominance is going down a little bit, or it did, when all these altcoins pumped, so we know that there's a little bit of new money coming into the market. It's not just money pouring out of the alts. Now, at the beginning, I think it really was, because we were below 190 billion market cap. The altcoins were getting eviscerated, but Bitcoin was going up in price, meaning like that. So no new money was really coming into the market at the time, but Bitcoin was skyrocketing and all the alts were dying. That leads you to a conclusion that all money was pouring out of alts into Bitcoin. But now we can see again, there's more growth happening. Bitcoin's not going up. Bitcoin kept going up, but also the altcoins were going up. I mean, think about Litecoin yesterday, or 2 days ago, or whatever, it was at $78. It got as high as like $95, $96 yesterday. Ethereum exceeded $200, and the market cap grew. So we know there's like new participants joining this market. All right, and that's just looking at the total market cap. That's looking at the Bitcoin dominance chart. That's just us, oscillating. Okay, so all right, y'all. That's it though. If you enjoyed this static video on Bitcoin, please hit that like button, that bell, that sub. I'll be live at some time, maybe 6 p.m. Eastern. I don't know. It's Mother's Day, so I'll keep you posted. Until next time, respect the TA.